Can I ask you to take your seats? We would like to start. So, this morning we discussed the retail investment strategy. We looked at some of the insurance implications. And this afternoon, we are going to look at the concept of value for money, particularly for IBIPs. And before we do so, we get value for our money because we have a speaker from EIOPA who came specifically for this conference. It is Valérie Marriott-Wood. She is the head of consumer protection at EIOPA, so she really is in charge of all the topics that we are talking about today. So Valerie, I welcome you to the stage, and you have the floor. Please.
Good afternoon, ladies and gentlemen. And thank you very much, Alberto, for inviting me to today's conference in the Eternal City. Now, some say that Paris is always a good idea, but Rome has a special place in my heart. I am, however, a little miffed not to have been invited to an audience with the Pope like Carol, but clearly he is more of an institution than me. But let me tell you about consumer protection. Consumer protection is at the very heart of EIOPA's activity. And the focus of today's event on consumer centricity is highly relevant to our work. Consumer centricity means that products are designed, manufactured, and distributed with the consumer in mind. These products must also offer value to these same consumers. To set the scene for the final panel today, I am happy to share with you, Orbi et Orbi, EIOPA's perspective on why value for money is so important, and also some elements of our work in this area. So let me start by saying that addressing value for money risk is crucial to ensure that insurance-based investment products, or IBIPs, truly benefit consumers. Indeed, value for money has been on our radar for some time. Many of you will know that we have identified and highlighted risks in this market for a number of years through our consumer trends work. Nonetheless, EIOPA is of the view that IBIPs, if well designed, can offer significant benefits. And consumer centricity, that is, putting consumer outcomes at the heart of product design, manufacturing, and distribution, is critical for tackling value for money issues. Our work on cost and past performance shows that there are unit-linked and hybrid products that do offer value for money. But sadly, there are pockets of products that regrettably do not. It is because of these outliers that EIOPA and national supervisors have highlighted value for money concerns, emphasizing that if issues are not addressed, there is a risk of loss of consumer trust. Earlier this year, EIOPA surveyed consumers across Europe as part of our Eurobarometer. While most consumers feel that their products do offer them value for money, a not insignificant percentage believe that this is not the case. In particular, consumers believe that IBIPs pose greater value for money concerns compared to other products. For example, our survey tells us that some 27% of consumers feel that IBIPs do not offer value for money, compared to motor insurance, where this percentage is 22%, and household insurance, 20%. Looking further at these results, we can see that there is a moderate correlation between consumer views on value for money and whether consumers trust insurers. Hence the importance of addressing risks early to avoid a broader loss of trust in the insurance sector. We have already observed this in the Netherlands, where high cost and poor performance of some unit-linked products led to a general loss of trust from consumers. And this scandal, which was much reported in the press, completely destroyed the market in the Netherlands for IBIPs. But beyond this extreme scenario, and unless the current rules are applied properly and manufacturers do ensure that their products offer value for money, there is a risk that stronger measures may become necessary. For example, we have observed that in Poland, as a result of persistent and significant risks in the unit-linked market, supervisors have had to carry out product intervention measures. Now, while EIOPA supports and welcomes measures designed to prevent detriment to policyholders, we are also of the view that, whenever possible, one-size-fits-all approaches should be avoided. Indeed, not all consumers want the same type of product or have the same needs and requirements. And we want to avoid that as a result of a blanket approach. Certain products end up disappearing from the market. Now, building on its work to identify risks in the unit-linked and hybrid insurance markets, in 2020, EIOPA started enhancing supervisory activities to better understand product design and manufacturing. And the goal of this exercise was, of course, to identify products which do not offer value for money. Adopting a risk-based approach, EIOPA identified specific products and carried out enhanced product oversight and product testing analysis. From this work, it emerged that many of the products identified did not, in fact, offer value for money. And let me give you some examples. So we saw that to break even at the end of the recommended holding period, some of the products required an annual average return, which was significantly higher than the market average. Some of the products, and that's even relying on the assumptions of the moderate scenario in the PRIPS-KID, did not break even at the end of the recommended holding period. And other products, assuming an average annual return equal to the market average, for the past 5 years, would not break even either. In addition, EIOPA also identified that some of these products had significantly higher costs that were often not justified by the benefits and the services offered. And this finding was also confirmed by the findings from several national supervisors who investigated the product oversight and governance processes for these products. At the extreme end of the spectrum, EIOPA identified products whose cost over the entire recommended holding period equaled almost 80% of the total premiums paid. Other examples include products with high biometric risk premiums, a cost, not counterbalanced by high biometric risk coverage. And finally, for a number of products, EIOPA identified very complex features and structures which resulted in the products not offering value for the identified target market. Namely, bonus structures which are costly and kicking late in the product, different layers for returns and cost calculation, etc. All of these layers of complexity that customers struggle to understand. So based on these findings, EIOPA's Board of Supervisors decided to start developing a toolkit to address value for money risks. And the first step was a supervisory statement which was issued in 2021, which highlighted that value for money is a key element of the current product oversight and governance framework, and which aimed at promoting more convergence in how supervisors assess this aspect. The statement clarified that while supervisory activities should not interfere with pricing, manufacturers should be able to present a structured pricing process. This should include evidence that costs and charges are properly identified, quantified, and are due. And William said it this morning, due cost, that's the key concept. It's not cost per se in isolation, it's whether the costs are due or not. This supervisory statement was followed by a methodology on how to assess value for money risk in the unit-linked and hybrid market. The methodology aims to ensure a minimum common approach by national supervisors and also offers more clarity to manufacturers and distributors regarding the supervisory expectations when assessing value for money. But beyond the methodology, EIOPA was also asked to give national supervisors more tools to address these issues following a risk-based approach. And this is where benchmarks come in. And long before benchmarks starting being associated with the retail investment strategy, EIOPA had already begun working on developing value for money reference benchmarks. And as we know, there are many questions on this topic. Let me start by saying how EIOPA sees the benchmarks we are currently working on, what they are, and just as important, what they are not. So for EIOPA, benchmarks are a tool, operative word here, a tool, to help supervisors in taking a more risk-based approach to supervision by identifying outliers, i.e. those products which are outside of the perimeter of the benchmarks and which may require greater supervisory scrutiny. They are also a tool to enable insurance product manufacturers to better determine if their products offer value or not, i.e. the requirement to determine whether costs are proportionate to the benefits, taking into account other available and comparable offers in the market. And there are also multiple quantitative and non-monetary indicators for the relevant product clusters. And now, more importantly, what benchmarks are not. They are not intended as a consumer disclosure tool. They are not a cost cap. Manufacturers can go beyond the benchmarks, is from the testing they can prove that they offer additional features that offer value to consumer and which justify the additional cost. They are not a safe harbor. Manufacturers who are within the benchmark, whose products are within the benchmark, are not excluded from product testing. They should always ensure that the products offer value. And they are not one single indicator. They are multiple quantitative indicators that are meant to highlight cost and benefits of insurance products. EIOPA plans also to include consideration on non-monetary aspects in order to facilitate the value for money assessment. And they're not one size fits all. There will be different product clusters that will be created, and there will be different benchmarks which will refer to these various clusters. Now, in practice, we expect that supervisors will use the benchmarks to help identify products which, at first glance, may not offer value for money, and for which further scrutiny is required. Once we are confident with the benchmark and the data, national supervisors will also share the benchmarks with manufacturers, and eventually we will also publish them. But I repeat, this is not a consumer disclosure tool, and it will not be presented as such. The benchmarks will provide manufacturers with data on other comparable offers in the market, and manufacturers can take this into account to help determine if their products offer value or not. Now, just this morning, as Petra indicated, we published our methodology for public consultation. You can check our website for the details, and we're counting on you to provide a lot of feedback. But let me explain something about our methodology now. It envisages a three-step approach. In step one, EIOPA is proposing a system to categorize unit-linked and hybrid insurance products with similar features into groups based on policyholder needs. This is fundamental to bring comparability to a market characterized with highly diverse products. While the criteria for clustering are identified, the final set of clusters will be determined based on empirical data, as some clusters may not have enough products to develop a benchmark. And at the same time, for some of the non-essential features for which there may be enough product to have a different clustering. All of this will be tested based on the data. In step two, and building on the value for money methodology published in October, EIOPA is suggesting new indicators around which value for money benchmarks should be developed. EIOPA, based on the data, will also determine which indicators work best for which product. And finally, in step three, the third step is the actual data collection and the benchmark calibration. To minimize the reporting burden, we will recommend leveraging existing data collection processes, such as the one for the annual cost and past performance report. Once the data is available, benchmarks will be developed based on percentiles. But beyond the quantitative benchmarks, which already take into account some non-quantitative product features, EIOPA will also provide guidance to national supervisors on how non-monetary benefits can offer value and relate to the benchmarks. Finally, and before I conclude, I would like to address the big question that I know some of you are asking already. How does this relate to the risk proposal? As I said earlier, since 2020, EIOPA has been gradually developing a comprehensive and proportionate toolkit that enables national supervisors to address the value for money risks in the unit-linked and hybrid insurance markets. As part of this, EIOPA has already started its work on benchmarks prior to the publication and independently of the retail investment strategy. EIOPA welcomes this risk proposal. However, our current work should be considered independent from the risks and is fully based on existing IDD requirements. In fact, even though EIOPA is of the view that this preliminary work can inform the risks, as it will provide some real practical expertise on how to develop benchmarks before the methodology on the risks is developed, our work and approach is different from the risks, because our approach is to develop benchmarks based on a sample of products, and that those benchmarks would be used for supervisory purposes, i.e. a tool to enable a more risk-based approach. Benchmarks, value for money, cost and past performance, consumer trends, these are all vital elements of EIOPA's work, and that are designed not only to enhance consumer protection, but also to foster trust and stability in the insurance market. I hope that setting out EIOPA's view on these issues will have paved the way for a good debate in the next panel. Vi ringrazio per la vostra attenzione. Thank you very much. Over to you, Carol.
Thank you very much, Valerie. Your presentation gave some more light into how EIOPA has developed these benchmarks. And let's now hope that they will not turn out into something that is completely different from what was originally intended. Well, thank you again. Ladies and gentlemen, before we start our panel discussion, we will have the chance to look and to listen to the experiences in 3 member states, in Poland, in Germany, and in Italy. And I would like to ask to the floor the 3 speakers. Damien Jaworski, please take your seat here on the podium. Axel Oster, Damien, by the way, is Director of International Cooperation at the Polish Supervisory Authority. I've known Damien for many, many years, where we were fighting battles in Brussels at different sides of the table. Axel Oster, who is Director General for Group Supervision at BaFin, also an old hand from earlier battles. And then last but not least, Lucilla Catarina Grossi, who is IVA's Deputy Head of Market Conduct Supervision. And these 3, ladies and gentlemen, will introduce some of the developments they've seen in their country. And I would like to start with Damien, if that's okay. I pass you on this thing. They'll put the opening slide, and then you just change your slides. Damien.
Thank you. Thank you very much, Karel, for these kind words. I think I couldn't present myself better. It's the other one. Okay. Do you hear me now? Okay, better. I'll speak closer to the microphone. Sorry about that, but unfortunately, weather in Rome is not as favorable as it is in Warsaw, and hence the quality of my voice. Thank you also, Alberto, for giving me the opportunity to speak about a supervisory action of a very particular nature that we have undertaken a couple of years ago, and which led to adopting in the middle of 2021, for the first time in the EU insurance market, product intervention relating to insurance-based investment products. I will present this extremely briefly on 3 slides only, Karel, no worries, regarding the rationale, its content, and the consequences or the market outlook after the product intervention was enforced. In principle, there were 2 fundamental reasons why we have decided to undertake this measure. The first one being the characteristic of the unit-linked market existing in Poland, having extremely negative opinion of the public, and the tendency, a stable tendency to decline in terms of the amount of products in the market. The second type of rationale was relating to our conclusion in-house that irrespective of all the initiatives we have undertaken in the course of quite a number of years prior to launching product intervention, all these efforts failed in bringing the market to say up to our expectations. And in particular, as regards the unit-linked products, there were significant variations and discretion in terms of amount and types of fees applied to the products, which in a consequence led to the situation where benefits in most cases were much lower than the premium paid. I'm not going to come here into any details because I think Valerie has made a very good introduction to at least my presentation. In terms of some other aspects which led us to this decision was, for instance, the fact that something actually what was discussed in the first panel today, protection cover in these products rarely exceeding the level of 1%. Also, the extensive KIDS analysis that we have made showing something which was also confirmed by EIOPA, that even in case of moderate scenarios, these products were not supposed to bring any positive return on the investments made. All in all, we have also, based on our, or with the assistance of our actuarial team, performed in the course of a risk assessment framework a thorough analysis of the products existing in the market, and you can see on the slides what was the performance of 7 flagship products of 7 largest insurance companies offering unit-linked products in Poland. The conclusion was simple. There is simply no value for money from the products in the market. The second group of arguments that led us to the decision to launch the product intervention were the reasons relating to our activities. We have, in the course of a couple of years, conducted in a triangle of 3 public institutions and the industry a very extensive dialogue trying to change the situation. On the public side, these were the Polish Financial Supervisory Authority, so the authority I represent, the Office of Competition and Consumer Protection, as well as Financial Ombudsman, which in Poland has public status, and all 3 institutions play a role in guaranteeing that consumers are protected. All these 3 institutions were conducting a dialogue with the industry, which led to no conclusion. On our side, we have also launched a number of initiatives in the form of, for instance, numerous guidelines relating to product distribution, product oversight and governance, bank assurance, as well as product adequacy assessment, also without success. All this led us to a consequence that we are out of ammunition, so to speak. And in this sense, thanks to the fact that in the meantime, we have realized that we have one more solution at our disposal, which is a supervisory measure of last resort. You can use if everything else fails. We have decided to take advantage of it. It has limitations. For instance, it can be applied only to new products. So we were able to change the situation from the moment product intervention was enforced, but we could not touch any existing product in the market. Due to the COVID pandemic, we have also decided to focus only on the investment part of the product. The so-called biometric risks or biometric elements of the product we left aside because of the uncertainty of how, for instance, mortality rates are going to be affected by the pandemic. But because of focusing on the investment element and the technical criteria we have developed, in a consequence, it led to a situation which the product was unbundled, which has on the investment and protection cover part, and it had positive consequences, which I'll tell you about when I'm going to comment on the next slide. We have, when planning our intervention, decided to focus it on 3 criteria: value for money, asset quality, and transparency of product distribution. And in terms of the most fundamental criteria, value for money, we have decided that the return rate on the product we are going to define as a minimum, or set it at a minimum level of 50% of the risk-free rate, which is a sort of objective figure, so a neutral benchmark based on which we can define a minimum level of return of expected return of all the products we would like to have in the market, which are offered to retail investors. Apart from that, we wanted to introduce in the product intervention to other criteria, like I said, asset quality and transparency of product documentation. Unfortunately, in result of consultation with EIOPA, we have to leave them aside with one exception, because EIOPA advised us that product intervention being a measure of last resort, we have to first and foremost consider whether we can apply these measures in different form. So eventually, the only element of criterion 2 which remained in the product intervention was a ban on including in the investment part assets in the form of contingent convertibles, being new financial products, which because of the changes in our legislation, might soon become very popular in the market, and we were afraid that they might be included in the unit-linked product. Everything else, so everything else that related to asset quality, as well as transparency of the product documentation, we had to deal with in a different form. In terms of transparency of the product documentation, we have introduced our expectations through a supervisory statement, which entered into force at the same time when the product intervention. And in terms of asset quality, we will do it through a legislative change, which is in progress, and hopefully in the first half of 2024, our legislation will change in a way that, in principle, the conditions for assets in terms of unit-linked products will be similar to the conditions stemming from PRIIPs provisions. So in the unit-linked products, there will only be a possibility to have assets which are allowed under UCITS. So now how the situation looks like. First and foremost, focusing on the quantitative figures. These figures present actuarial assumptions. of how the situation would look like if nothing changed, differentiating between single premium and regular premium products, if we did not enforce the product intervention and after enforcing it. So what comes immediately from analyzing the figures is that unlike the situation prior to intervention, both on the side of the policyholder as well as the insurance undertakings, figures are green, and also you don't see anymore such disproportions in the amounts of the return for client, which is negative, and profit margin for the insurance undertaking. In terms of other consequences, a number of both unit-linked products as well as unit-linked funds fell quite substantially by 2/3 and 3/4 respectively. Also, something I have mentioned earlier, unbundling led to a situation that the products became much more transparent, and many very complicated products, expensive products, like those are offered through the bank insurance channel, or so-called universal products, which were the source of extreme amount of different types of fees. These products disappeared. Another positive change was, luckily, I must say, luckily, so something we have taken into consideration, but the situation did not take place, and namely encouraging policyholders to move to new products, which would expose them to additional transfer costs. That did not happen. And unfortunately, something we might expect as a gesture of goodwill, but it did not happen. All the old products remained as they were. So in this sense, the old portfolio remains intact. We could not touch it. We could not extend product intervention over these products, and nothing changed there. So they are going to stay like this until maturity. And conscious of time, Karel, with this final comment, I conclude my presentation, and thank you for your attention.
Thank you, Damien. As you can see, this is a process which is not evident, it's difficult, but it was clearly necessary that there would be an intervention in this case. Let's now move to Germany, and Axel, can you show us what you have done in Germany?
Yes, I will do that. My presentation is already uploaded.
It will be there in a minute.
Okay.
Just you can start.
Okay, then let me start. Good afternoon, ladies and gentlemen. Many thanks to IVAS, and in particular to you, Alberto, to give me the opportunity to actively contribute to this important international conference on consumer, respectively policyholder protection in the area of insurance. Also thanks to you, Karel, for your kind introduction. It's a pleasure for me to be here and to see also some good friends. And I'm happy to share with you in the next 10 minutes BaFin's supervisory experience on the basis of a guidance note on conduct issues related to IBIPs recently published by BaFin at the beginning of May. As you may know, BaFin is a fully integrated supervisor. That means we act as a prudential plus a conduct supervisor. And I have here mentioned the Solvency II directive plus the IDD. We do that everything, all under one roof, I would say. Conduct of business supervision, according to the IDD, is relatively new for the German market, in particular the aspect of product oversight and governance. Value for money of insurance-based investment products, these so-called IBIPs, and similar savings products is a priority of BaFin's conduct supervision, because we have around 50 life insurers offering such products with BaFin as a home, a national competent authority, and these products are key products in the German life market. some figures here. In 2022, there were 2.5 million new IBIP contracts, and thereof 1.4 million unit-linked IBIPs. And we stipulate that the customers that are offered these products, that they get also an appropriate value for money. That's the main issue, and that's the main intention with what we are doing. I mentioned already the recently published guidance notice for the conduct supervision of IBIPs in my authority, and this is the guidance notice 1 from 2023. And when you read these recitals 15 and 18 from these guidance notice, you see what is the focus of the of this initiative. So I quote, when assessing the value for money of savings products, especially unit-linked, life insurers must formulate return targets taking into account external factors such as capital market conditions. These targets must be in line with the expectations of the target market they have determined. And the other quote is, as product manufacturers, life insurers are required to assess the interaction of the variables costs and return before costs as part of their product testing. From the policyholder's point of view, the higher the costs, the higher the risk of an insufficient or even negative return under otherwise similar framework conditions. The costs of a product, on the other hand, are a variable that can be influenced by insurers in the context of product manufacturing more extensively than the return, because they have the costs in their own hands. And the return is something which might depend also on other issues. So a suitable indicator for assessing these total costs of a savings product is the so-called reduction in yield. I think with these two quotes, it is quite clear what our focus is, and we try to apply this in reality, in real supervisory activity. Here, our point of departure was that these IBIPs, they serve the customers as private old age provision, and the typical product would be a regular premium product plus a recommended holding period of more than 30 years. This can be unit-linked or hybrid IBIPs dominating the new business. We have observed that a high number of the customers, they terminate their contracts before the end of the recommended holding period, based on a lapse ratio of roughly 3.33% in unit-linked insurance in the average of the years 2018 to 2022. Due to upfront costs, which is quite typical for the German market or for the product on the German market, these customers suffer even more from high costs, and the reduction in yield is quite high, affecting the return. Our expectation to the market is that if it can be expected for the target market of a product that a significant proportion of the members of the target market will surrender their contracts prior to the end of the recommended holding period, this must be taken into account in the assessment of the value for money, because this is a very important fact that these are cancelled, these contracts, right before a long time before the end of the recovery holding period. And this has effects then, or this must be reflected in the value for money aspects. And it will not be sufficient to take only the end of the contractual savings phase as a basis for the determination of the value for money. We think that this is quite a crucial issue to be taken into account in the product designment. So how do we deal with that in our day-to-day work? We have implemented a risk-based supervisory approach and identified some risk indicators. And our aim is to prevent and identify the outliers in these situations, in the selling of the products. And there are outliers, and these risk indicators, they are based on the data for the German life insurance industry as a whole. So we have some kind of an industry, we produce some industry figures. As a benchmark, we look then at 75% quantile. That means the above 25% of the most cost-effective products, plus the data on the level of the individual undertaking. And then you can compare how a company is, in which position a company is compared to the market. We have done surveys on the reduction in yield on the most sold products of the companies, and also some product combination. We have taken some conclusions out of these figures. For example, a benchmark for a typical unit-linked product with a recommended holding period of 30 years, it would be then a value of 2.35%, which would then be higher than that rate. You are then in this 75% quantile, which is a kind of an outlier and at least something that is worthwhile to look at. We also look at some figures on remuneration and other expenses for intermediaries. We have done some intensive surveys also on this aspect. We have a quite heterogeneous intermediaries construction or market in Germany, and we think that it is worthwhile here that it was worthwhile to have a close look at that as well. And then we take from our regular reporting the new business and early surrender figures in relation to contracts, the acquisition and administration costs compared to the earned premium, and also the performance of the funds or the units, which is also or information that can be taken from the reporting to BaFin. So we put everything together, and we then get some information. We get also some important hints on where it is worthwhile to look at, and our initial experiences with this and our perspective is that the insurers welcome that we expose our supervisory expectation, and that's what we are doing with such a guidance notice, and shows that this is important and relevant, and because these legal provisions that we take from the IDD or from the product oversight governance regulation, these are sometimes a little bit abstract, and it is important to make them or to apply them in practice, and just to interpret them and to issue a supervisory expectation. Even though higher costs can be overcompensated by higher returns, the assessment of costs is an essential element of product testing as part of the product oversight governance, and the setting and the publishing of these benchmarks has a positive effect on the market. And so far there is encouragement to reduce the costs, and we do get some reactions from our industry that this has these effects that are intended. And following to its risk-based approach, BaFin has identified 6 insurers in 2023 and 4 for 2024, which we assess more closely. We have started with 3 insurers in 2022 when we developed our supervisory approach, and our experience, these are tough meetings we have with insurers, but it's worthwhile, and we expect that our market will, of course, obey this new guidance notice, and I think it has helped to improve the situation. So I think that's the end of my presentation. I think I'm right in time, Karel. Thank you very much for your attention, and nice to be here.
Thank you very much, Axel, for this presentation about the action taken by BaFin. And let's now move to a place closer to our heart, which is the situation in Italy. And we will hear now from Lucilla Cattarini what has been done in terms of the POG at IVAS. Please, you have the floor.
A few years ago, we started some really practical work in order to investigate how insurers had implemented the POG process with a focus on IBIP. We found differences, different approaches. We found some achievements over time, which improved, and still we found some actions. I don't know how to go on with this one, but hopefully. Okay,
Yes.
that's it. Thank you. And still some shortcomings to be addressed. This is why we drafted some expectations that we had, that we wish to make, that are public to the insurer, in order to have a sound, to enhance, strengthen the POG process. A good process to the benefit of policyholders. These expectations are in line with the methodology issued last year by EIOPA, which we contributed to write, to develop. Also in this document, we highlighted, for the sake of transparency and accountability of our own activity, we highlighted which of the tools envisaged by the EIOPA methodology we apply in our activity. I'll briefly go through the expectations, if I manage to. Okay. So there are 15 expectations. The first 4 are related to governance. Basically, the point is that the POG process needs to be embedded. It's to be part of the governance system, to be part of the risk management and internal control. Of course, everything new starts in a room with a few people, but as time goes by, it is important that this come as a culture, insurance of the insurer. As we said this morning, everyone needs to move in the same direction. So it is important that it's formalized, it's part of this governance system, and it's put into action by everyone. Second point, there are 3 expectations on the definition of the target market, which we expect that it is granular, adequately granular, and is based on realistic data. Target market is consumers, is the representation of the consumer and of its needs. If it is granular, its granularity supports the assessment of the value, that this product has value for this target market. If it is wide, this assessment becomes much more difficult. There are 6 expectations on the product testing phase. This is the bulk of the document. There are 6, but there are many pages, many examples. There is a lot of stuff inside this. And point is that there should be an analysis, a quantitative analysis, predominantly quantitative. This means that there is room for qualitative one as well. Still, most important point is quantitative. I wish to underline that in our activity, in our activity with the insurers, we found quantitative analysis. That it was there, but it was more a kind of a scoring system. Any kind of drivers, any kind of scales, giving rise to a final score through a system of weight. There was a lot of effort. Still, in our view, and in the EIOPA methodology view, we see it is the same. We think that in order to assess the value for money for the policyholder, we need to walk in his shoes. We need to have a representation of his position. So we ask that in our expectation, we expect that there is, that insurer performs a customer-side profit test. So a cash flow projection with the premiums, with the cost, how much they are, when they are paid, why they are paid, with the protection issues, so floors, so guarantees. It's important that the protection side is carefully assessed. What happens in case of death, in case of surrender? This is its position. And that, to this one, some indicators are applied. These are the same indicators as envisaged in the EIOPA methodology issued last year. And even though it might seem obvious, I wish to underline that it's very important that, that the insurer identifies some thresholds. Every time we speak of threshold, there is some kind of reluctancy. Setting threshold is not easy. Setting good threshold is difficult. Still, thresholds are needed. Because if you don't have a threshold, you are not led to take action. Might be simple, might be change a product feature, might be lower a bit a cost, might be change one of the underlying assets. But if you don't set in advance a threshold, you are simply led usually to monitor the situation and to accept the product as it is. It's not bad, it can go. This is why we insist, even though, of course, threshold might be revised, might be, nothing is carved in stone. Still, we need an effort on this side. And EBAS does the same. We apply the same indicators through which we challenge insurer choices. There are a couple of more on the review phase, but due to time constraints, I stop here. We are processing comments, and hopefully we will issue the final document very, very soon. Thank you.
Thank you very much. So, ladies and gentlemen, this has shown how 3 supervisors deal with this exercise of looking critically at these products. And we are now going to discuss this in a panel. And so if I may ask all panel members to leave the stage and to leave some room for the next or last panel of the day, which includes the following people. First of all, we have, and we're very happy to have him here, Ante Zigman, who is the president of the Croatian Supervisory Authority. So Ante, please join me here. Then Dario Focarelli, General Director of ANJA. He doesn't need presentation because he's so well known. And Paul Carty, who is the Chair of the EU Affairs Committee of BIPAR. And then, last but not least, we have a representative of the Italian consumers, Carlo De Masi, from Adi Consum. Please, Mr. President, join us also on stage. Maybe you can sit to this side so that we have an equilibrium. No, you prefer this is the asset side. That's the liability side. Thank you very much. Now I cannot say ladies and gentlemen because we only have gentlemen at the table. And I would like to start with a very general question. If you look at this debate about IBIPs and the whole discussion about the lack of appropriate planning or development of these products, if I were to ask you, what are the 2 most important things that you believe should be done in order to make sure that the products are properly developed? Can I start with you, Ante? What do you think? What would you say? What is your advice?
Thank you very much. First of all, I would like to thank Alberto for the invitation, and I'm very glad to be here today. I can say that it is my first time in the room, so I'm very grateful to be here. Your question is very, very general, and for me as a supervisor, I don't know, is it good to start with that question. But I would say from these presentations which we had at the beginning, it was visible that those complex products needs special attention from the insurance companies. And in general, we are talking about the products which are relatively young. It's a new products which are existing last couple of years. We had that Corona time, so the time for the development was relatively limited, if we can say that. So those interventions from which we heard in the first part of this session actually showed that it was justified from the regulators to intervene, and that is something what is important. And at the end, I think that insurance companies realize that they need to do something, to change, to introduce new ways of the designing of that product. That is something what I would like at the beginning is the question of the design. And that design is related somehow with the expectation which the consumers have at the beginning and realization. It was visible from the Damian example that the difference between expectation and the realization there is a huge margin in between, let's say. It's a not narrow margin, it's a huge margin, and of course in that case it is very hard to bring the consumer to the product and to have the consumer that he's happy with that product. We need also to take into account that the consumer needs to live a long time with that product. Can you imagine you have something in your portfolio for 20 years which gives the negative result every year, so you really don't feel well, and then you terminate the contract and it is even worse. Actually, you get, I don't know, 50% of what is invested in. I had a few cases which were very strange and very painful for the consumers. So in that respect, and also that relationship with, that is also important, the distribution, how the product is explained. I can tell you one case which we had when one big European insurer, it is not Italian one, but a big one, and they ask distributors to be more creative, to bring more people to their unit-linked EBIP products. And then it happened that one of them created a nice website with a lot of nice promises, nice scenarios, and so on, which were unrealistic. So at the end, of course, someone reported him, and we forced him to delete that web page, and it is removed. But I mean, there is also a relationship not only between the product and the consumer, there is also between distribution and those who are creating those products. And at the end, I will finish with that also example. I asked few times some managers, are paying for, are they investing in such a products? And I always get the answer, you know, I have already something. At the end, I realized that they are not investing in their products. Can you imagine that, I don't know, managers in Ferrari are driving, I don't know, Volkswagen or something like that. So if you believe in your products, you need to show by your example that you are that you believe in that. So I must say that I liked what Barbara is not here anymore, but she was really saying nice things of that products need to be cognitive acceptance, for example, ergonomic. So actually that is something what really can bring the consumer trust, of course, with all what we ask from the consumers from the producers to take into account to protect the consumers, which are really for us, I would like to say us, I mean in the European tradition, in the center of all our activities, not like in some other jurisdictions, but in Europe, I think that consumers need to be in the center of the product and of our work. Thank you.
Thank you very much, Ante. You said something which is very important, I believe, and that is that you should not, as an insurer, sell a product which you wouldn't buy yourself. This is so obvious, but it happens all the time. So this is, I think, something that we, when we go home, always think about. This very simple lesson that we learned. And I'm sure that you will agree with that, Carlo. So what are your two issues that you see in a development process from a consumer perspective? What should be there?
Ma intanto diciamo che il mio osservatorio non si riferisce all'Italia, anche se ho ascoltato tante cose interessanti e mi pare che diciamo, le tematiche siano un po' comuni per tutto quello che è avvenuto e avviene per le cose che ci sono. Allora, con riferimento all'Italia, noi purtroppo nel nostro paese non c'è una cultura finanziaria molto, diciamo, diffusa. Peggio la cultura assicurativa. Quindi una delle cose da fare sarebbe assolutamente una vasta campagna informativa / formativa, dove noi insieme alle compagnie di assicurazioni potremmo in qualche maniera rendere dotti i cittadini consumatori rispetto ai prodotti che sono sul mercato e a come poter in qualche maniera orientarli meglio verso quelli che hanno meno rischi. E questo è un tema di carattere generale. L'altra questione che a mio avviso non c'è neanche da parte dei cittadini, nonostante, voglio dire, tutto quello che avviene nel nostro paese è molto a rischio sismico, a rischio alluvionale, non c'è la cultura della prevenzione. Allora noi come Adiconsum ci siamo fatti interprete, poi il responsabile dell'ANIA lo sa, abbiamo proposto e poi è stato sottoscritto anche da altre associazioni una base comune per rendere obbligatoria, almeno in alcune realtà del paese più a rischio, delle polizze a copertura degli immobili, peraltro un paese dove c'è un patrimonio immobiliare di proprietà all'85%, ma anche sulle colture agricole. Ora, se questo non fosse possibile, perché certamente l'obbligatorietà, io credo anche, proprio per quello che dicevo, la prevenzione del rischio, anche la RCA, se non fosse obbligatoria, in Italia sicuramente non ce l'avrebbero tutti. E allora io dico, se non fosse obbligatorio potremmo pensare per esempio a un beneficio fiscale in detrazione, almeno, voglio dire, se non tutto, almeno in parte, in maniera di invogliare sempre più persone a coprirsi dai rischi che purtroppo incalzano sempre di più.
Very good ideas. First of all, one needs to be aware of the risks. That is very important. And then, of course, for natural catastrophes, the idea about a mandatory insurance, which is difficult, but a fiscal clause can help to have people buying into that. So that's definitely important. If I move now to the other side of the table, Paul, you were an old hand in the sale of IBIPs. What are the two magic things one should include in the product development, you think?
Oh, Carl, thank you very much. I'm sorry, everybody. I have a slight head cold, so my voice is disappearing. I was happy to be sitting beside my Polish friend, Damien, who I think had a cough as well. But I brought mine from Dublin to here, so it's an Irish cough, so forgive me. Carol, you always surprise me. You're hiding your skills. You started this morning quoting the Pope. Then you said you couldn't speak the beautiful Italian language, and you just gave a summary there for us all. You're so kind. You're really a bit of a rogue, but anyway, lovable for that. So the two things you say, Carl. Yeah. We've had a very good session. I obviously came here prepared and had some preordained ideas, but naturally I've been influenced by what I've been listening to, which I think has been very, very interesting and very timely. I suppose I have two core messages, Carol. we are now in a highly regulated market. We all accept that. The regulation is still relatively youthful. It costs a fortune. It costs an enormous effort on the part of an enormous industry to have this constant changing of the regulation. So I suppose my first point is, are we sure that what we already have in place is working properly? And in that regard, I found the last three presentations very interesting from our Polish colleagues, from our German colleagues, from EVAS, all in relation to POG, which is so important, because POG is preventative. Let's stop the problems before they happen, which we completely endorse. But again, I'd like to comment that these have been relatively recent evaluations, if I'm correct. The EVAS one has only been published in the last month. I think the Polish one was a little earlier, and the German one was sometime this year. So as a consequence, how can we evaluate the success of POG in terms of its current implementation? But in terms of what they're seeking to achieve, they have our full support. Something that surprised me then this morning, in a similar vein, was a comment by Petra Helkema. She said that the NCAs will start doing mystery shopping. We're now 4.5, 5 years past the implementation, not in all countries of the IDD, and they will start doing mystery shopping. I'm not sure how many of the NCAs within Europe have done thematic reviews or mystery shopping. Again, what lies at the back of those thoughts is, how effectively has the IDD been implemented? Is suitability, the existing demands and needs, the existing appropriateness tests, how have they been implemented? Have they been implemented? These are all open questions. We're rushing to judgment without the information. So that I have to say I find a little troubling. So I take a more analytic view of what we have already before rushing to judgment. And I think we're rushing to judgment a little too quickly, because I don't think we've done the fundamental analysis. Yes, we have barometers, which can be questioned, but the more fundamental analysis, hard facts, I haven't seen, so we can't enter into a judgment whether the IDD and the various other things have been effective. So I'm sorry, you poor man, that's point one on my poor throat. Okay, point two, what else would I like? I liked the contribution this morning. There were two comments I wanted to pick up on. One was from Alexandra in Finance Europe, and she said to consumer, she used the phrase, pretty overwhelmed with the information. I think it was my French friend who used the phrase, lost in translation. So the communication strategy or the information we're providing to consumers currently isn't working particularly well. And certainly I welcome the review in that regard to make it work more effectively. And then to tie it all together, I echo the sentiments expressed by my Croatian friend in relation to Barbara's contribution, because it was exactly the phrase I picked up on. The use of ergonomic communication I thought was particularly relevant in what we are seeking to achieve as an industry. I think we're all agreed in what we want to achieve. All we're, if we want to call it that, arguing about is how we achieve it. So those are my responses. Thank you, Carol.
Thank you very much, Paul. I mean, these are certainly also two very relevant aspects. And you know, I have been a regulator all my life until I retired. Now I cannot regulate anymore. But what I learned as a regulator is that you have to learn to be modest, because constantly changing the rules is not leading to better regulation. Better regulation means that you look at what you have regulated, you see how it has been implemented, you learn from that, and then you try to improve. But the problem of regulators is that all the time you're pressured by political urgencies. And what happens in insurance, as it happened in banking and in other fields of financial regulation, you have some institution that misbehaved, suddenly get a rush. And as a politician, you have 5 minutes to answer. And you develop regulation, which by definition is bad, because it deals with one particular case. And so you forget a lot of other things that might happen. And that explains, it doesn't justify, but it explains why we are where we are. And that also is the reason why when we hear we are overwhelmed by information. Why is that? How does this happen? It happens that in a negotiation, the Commission says we need to have 5 issues of information. Then it gets into negotiation in the Council and the European Parliament, and the 5 issues end up 50 issues, because everybody wants to put his sauce to the spaghetti. And so you have an expanding and expanding type of regulation. I mean, again, no justification, but it is good once in a while to reflect about it and to see whether we can do better. Dario, you're also a very experienced man in this area. So what sort of message you can bring us? How can we improve this product development stage?
Thank you, Karel. Thank you to IVAS for inviting me. And Karel, you say experience. I remember when we organized a conference more than 15 years ago. And we had a wonderful dinner at the Forum Hotel, just overlooking the Forum. And at that time, we were discussing about Solvency II, the first negotiation of Solvency II. And you said, I just met the Pope, then it was a German Pope. And the German Pope has told me that the surplus fund are capital. So, I mean, experience can always help in, let's say, framing the discussion. And your ability to frame such discussion also with this very important talk that you have is something very, very useful. So, and I start also the 2 things that I want to underline as an answer, saying that basically has been already said by my friend here and also by Karel and possibly also by the Pope. So the first one is better regulation. Better regulation, no doubt about that. I would say also more precisely with regards to the theme we are discussing now, more supervision, less regulation. This is something that I do believe very, very, very deeply. We have to emphasize effective oversight while minimizing costs for companies, policyholders, and distributors. This is something that I want really to emphasize. Generally speaking, I like very much President von der Leyen commitment. One regulation in, one out. I also will prefer less regulation is more, but still, let's have one in, one out. And this is something that in these topics, think about product oversight, retail investment strategy, and value for money. If we do believe that for whatever reason, suitability test, actual suitability test, actual appropriateness test doesn't work, just change it. Do not add a best interest test without changing the other 2. This is something that to me is so simple, so clear, and why this is not a current practice, to be honest, this is not clear to me. Going more in detail before arriving at and before moving to the second aspect, we have this new regulation on product oversight. EIOPA did a very good job. I learned by the EIOPA's presentation, by Valerie's presentation, that they identified products with no value for money. Okay, my question is, and then what happened? If you are so sure that there is no value for money, and I am also able to, let's say, to be skeptical, a bit skeptical, but suppose she's right, she identified. So what? This is something that we have to think about, because words are clear meanings, and if you say that a part of the market is offering something that is not good, and you are the supervisor, what kind of act you did after that? I understand that the product POG is a quite new process. So, and I will discuss about also what Lucilla and other colleagues presented before in the second round. But let me say that I believe on the exercise. I believe on this exercise. But the question became, so why risk? Why retail investment strategy? Just go deeper on value for money and product governance. Stop. So this is something that to me it's very important. The second part of the answer, the second topic. Product design and prices should remain under the control of private business. This is what we decided as Europeans in '92 to have in terms of the legislation for the single market. Okay? I think that this has been a great success of Europe. Now, basically, we are, let's say, in a way or the other, we are putting this legislation as under question. And this is okay, after 30 years, it makes sense to discuss the legislation. But please, stay at the fact. And the fact is very simple. And I give you an example that I am sure that we could agree, everybody. PEP, do you remember PEP? Pan-European Personal Pension or Pension Products. I don't remember exactly the name. So we discussed this issue for years. Also, I was confronting with my friends of the asset management in a way that I never had in a business market. And just to be clear and responding to what Ante said, my supplementary pension is an insurance product. It's not an asset management product. So I put my money where the mouth is.
Yes.
And possibly it's right that I could do better with other strategies. But still, this is the point. So we discussed years. And then at the end of the story, the decision was to put a cap to cost. Okay? So the objective was clear: increase participation in the pension supplementary market. One of the instruments, I don't want to say that was the only problem, but one of the instruments was a cap, because people obviously need lower cost. And so what? Very simple. No PEP in Europe after 1 year and more that they started. One year and more. No, some more months. Yeah. 1 year and some months. So I want to be very clear on this. I mean, price regulation is not the way, and I still stick to the single market ideas, and I still stick to the market forces to do better than regulators in setting prices. So please do not believe that all this stuff at the end of the story will lead to introduce some price regulation. I stop here, but let me just add that also this discussion on retail investment strategy should be keep in mind this very clearly. We can discuss everything, but if we are at the core of our single market, possibly we have to stop before arriving to cross the line. Thank you.
Thank you very much, Dario. See, you have clearly the support of the audience. You raised a number of fundamental issues, and I'm going to ask the supervisor at the table what he thinks of that. When you said less regulation and more supervision, the reality is that many of our supervisors are regulators, so that you don't necessarily achieve that result with passing the responsibility to the supervisor. But you raised the issue of price regulation, and maybe for the people in the audience, maybe not everybody's familiar with that, but before 92, it was common in Europe that you could only sell an insurance product if it had been prior approved by the supervisor. Approved, that means the design of the product, the price of the product, and the way in which you sold the product. And there is one country in the world that I know of, there may be more, but a very large country in the world that still applies this. That's the United States. And what have we seen? We have seen now that because of the natural catastrophes in California and in Florida, that the insurance industry has withdrawn from those states. They don't insure property anymore. And why don't they do it? Because the supervisors were afraid to increase the premiums. Because the increase of the premium is a political act. And therefore, they didn't increase the premiums. As a result, the insurer said, we cannot insure anymore because this is not a profitable business. And now they face this problem. People cannot find insurance in these states. And we should be careful in Europe. I'm not saying that it is the intention that with the benchmarks that we go in that direction, but there is a risk. There is a risk that you start and that you don't stop. And then we might end up having similar experience. So important to keep that in mind, but Ante, you are on call here very clearly. And I was, as I told you, I wanted to ask you the question whether this debate about IBIPs is just a question of the old member states. And whether in your part of Europe, these concerns are also relevant concerns. And now that Dario raised this question about supervision and regulation, how do you look at that? And also his point, or the point that made by Paul, that mystery shopping, why don't supervisors act when they have the means to do so? And can't we work on the basis of what we have? Sorry, it's a lot of questions,
okay.
But you can perfectly handle it, I know you.
Yeah, thank you very much. I wanted to respond to the questions and the topics of my colleagues, Dario and Paul. I will start with the regulation and supervision. Actually, in our case, we know that very well regulation and supervision goes hand by hand. So we are doing the both. We are regulating the market by our laws. I mean, that is done by the parliament and the ministries, but of course with the help of us as regulators. And then we expect from the companies to implement that. So we have some kind of self-regulation. And then later we come and see how it was done, and that we are calling, of course, supervision. And we are relying more on the internal internal capacities of the insurance companies who are actually doing and implementing regulation by themselves. And doing that, I can say from my experience very well. But I would move to the product design. It was that was raised by Dario about that it should stay the design into the hand of the corporates, and I fully agree. I'm totally for that, especially after you, Karel, mentioned that what was the situation a long time ago. So to make a simple product, to make a sustainable product, to make a value for money product, it should be on someone who is designing that product, and that is the corporate insurance companies. But we need to take care about the value for money. So we had that example. If you're talking about the region, let's say Central Europe, it's not only the case in Croatia, it was also the case in Poland, in other countries, was the CPI products. So the fee, what was paid for the CPI to the banks, was up to 90%. So what is the price of that product? 100 euro or 10 euro? So why the consumer is paying 100 if it is worth 10 euros? That is something what we really need to take care. I will not say more about that. To move shortly to the part which was open at the beginning of the conference, that is retail investment problem which we have, and retail investment strategy. It was also the question of the benchmark. So I can partially agree, and it is really important that we do not with the benchmark and like with the PEP. That's true. The limit of the fee actually put that product on the end of the list for the insurance companies. The benchmark need to be really carefully designed, because I think what is important, of course, that insurance companies are creative in their creation of the products. They need to have the space for the creativity. But of course, that innovation and creativity need to be, again, like the name of the conference is, consumer-centric. That is something what we really need to take care about that all the time. Now I'm losing the voice, sorry. I need some.
What is happening?
Yeah, and I would also like to point out and to return to the early start of the conference today, when Luigi said in his speech that the three things are important: the competition, education, and transparency. So a competition between the companies, that we really have competitive products which are good for the consumers, and consumers really need the competition. If there is a competition between the companies, I believe that the consumers, I believe in the market, and I think that we all that we are sitting here believe that the market, that the price is the best regulator. So the competition is something what will really bring the best outcome for the consumer. Regulation is here just to put the framework, and companies, I will again refer to the Dario when he said product design should stay into the corporate. Yes, but you need the competition, that all of you who are on the market compete with each other and design the best product for the consumer. That will bring, I believe, at the end the best price. Education, of course, that is something what is more on us, but it's also on the corporate to educate together with selling the products, to give as much as possible information which bring us to the transparency, which is always, you know, that small letters which are often somewhere in the contracts, no one reads, just sign, go home, and then later, when there is a problem, company opens the papers, and you know, you sign those small letters, but it's question, does it understand, or is it good for the consumer? Small letters could be also okay, but they need to be really in the something what is not harmful for the consumer. That is something what actually I wanted to conclude with, is that we really need to take care about those three components, and they are always working together. Actually, my belief is that we as regulators and supervisors, together with the market, need to act together in some way of the harmony. I know that the companies are always, and it's normal that they're looking for their profits. No one will buy the policy from the insurance company which create the losses. That's normal. The people are constantly arguing, especially in my case, that the banks or financial industry earning the profit. Of course, no one will put the money in the bank which is losing the money. So if someone needs to know how to work with the money, it should be the financial industry. So in that case, I think that we all together need to always work in the best interests of those for who are we existing, and those are consumers. Thank you.
Thank you, Ante. Do you have mystery shopping in Croatia?
Yes, we have. Sorry, I missed that. It's somewhere on my list. Yeah, we have the mystery shopping, and the mystery shopping we did 2 times, and it was very successful in our case. It is not easy because we need to do that with our people, with our staff, and we have a limited number of people. Outsourcing is very sensitive. Now we are trying to find a way how to outsource that for the next wave. But yes, we are doing that both for the insurance and also for the investment industry, which we are also supervising.
And is this the subject of specific powers to the supervisor, or is this part of your general supervisory powers?
Yeah, we have that in the insurance law. It's there is a part which is giving us a power to have a mystery shopping, because you know we need to work with the administrative procedures, so we need to be in the line with that, and we need to have some background in the law.
So that's important, because the fact that some supervisors don't do mystery shopping is that they don't have the powers to do that. Maybe you see Paul in that situation. Now, Carlo, I wanted to ask you, as a representative of the consumers, why would one buy an insurance-based investment product in a period when inflation is going up? Does that make sense?
Allora, io colgo quello che diceva il rappresentante, il dottor Sigman, del supervisore. Cioè, io credo che noi dovremmo lavorare appunto in un quadro di compatibilità per dare la massima fiducia ai consumatori. Lo diceva anche chi ha introdotto il panel, noi dobbiamo recuperare questa fiducia. Allora, io da rappresentante dei consumatori, in un momento in cui l'inflazione sale, vorrei garantirmi il capitale e avere un buon rendimento. Non so se questo sia compatibile con quello che le compagnie offrono rispetto ai prodotti. E allora dovremmo trovare una compatibilità dove tutti possono essere all'interno e avere anche la capacità da parte, voglio dire, di chi le compagnie che offrono dei prodotti di non dare dei prodotti alle persone che non sono in grado di poterli valutare. Questa sarebbe una delle cose eticamente da fare, cioè di non dare prodotti a chi può trovarsi in difficoltà, quindi avere queste capacità. Dal punto di vista del momento che viviamo, io credo che dobbiamo appunto lavorare in questo quadro e trovare la compatibilità tra compagnie e consumatori.
That is indeed very important, because we see sometimes that insurance companies will sell a long-term investment product to people that are 90 years old, which is not a very good idea to do. It's exceptional, yeah, but it happens. So you have to always keep in mind the interest of the consumer and the person to whom you sell that product. So Paul, there has been a long debate, and Dario has been referring to that, between asset managers and insurers about what is the IBIP. Now, what in your view is the difference between an IBIP, an insurance-based investment product, and a typical investment product? And why shouldn't these things be dealt with in the same way?
Before I answer your question, perhaps just make one comment, because on the last discussion it was on relation to mystery shopping. Mystery shopping is looking at the possible, but a thematic review is of the existing. So I think there are lots of opportunities for supervisors to actually look at contracts that have been sold whilst the requirements are in place. That's a thematic review. That's proper analysis. Mm-hmm. So you don't need extra legislation to see if it's a mystery shopping. There's a requirement to observe the existing regulations. Sorry, I felt I was a little lost. IBIPs are different. They are a different product. They're in a different environment. They're in an insurance more holistic environment. They're part of a suite of products. Technically, they are also have, of course, there's some of them that will have some elements of life cover, some of them higher than others. There are the guarantees that are within it, but also there are different markets and there are different approaches in the different markets, which brings me on to a related subject, which is what we're trying to achieve here in the RAS with this horizontal regulation, but it's on top of an IDD, which is of course minimum harmonisation. So we're here dictating to the specificities of each market. We're not taking them into account. We're not leaving the flexibility that is there, which I think is actually very, very important, and it's a fundamental approach that we should be adopting. So the markets are so different. The IBIPs are different within those markets. And yes, there are significant differences. We don't see them as necessarily an investment contract. So you have to look at them in a different light. The distribution is different. The target market, in some respects, are different. One is a more mass market product than the other. So there are many inherent differences. Sorry about my voice. And the other point is, I just think it's worth reflecting upon. MiFID was passed before the IDD. Mm-hmm. The IDD was passed in the full glare of MiFID. Decisions were taken that there were differences. That's why the IDD came out as the IDD. It wasn't done so in isolation. People looked and said, no, it's appropriate, having seen MiFID, that it should be treated differently. So if you're looking for evidence, why that approach? Was it right? I believe it was.
Yeah. If we look back at IBIPs and we look at the development in terms of life insurance in Europe, isn't it true that most insurance companies have moved out of guaranteed products?
For Paul or for me?
For both.
In Germany.
But you can start there. No.
Go ahead.
Well, again, it depends on the markets, doesn't it? My understanding is the guarantees in the German market were presenting certain difficulties, yet to be completely resolved. Other markets, so There are different
Depends on the
approaches.
market,
It
yeah.
depends on the market.
Yeah.
And the guarantees.
Yeah. Okay, thank you. Dario, the question that I was going to ask you is related to the Italian developments and the development of the POG, you know. How do you look at that? Do you think that that's a good exercise? Do you think that it will potentially be able to take care of some of the concerns that the Commission expressed in its risk proposal?
Yeah. First, think about that. Expectations by supervisory authority. This is a quite new form of soft law. And I do understand that it's quite widespread. And I also understand very clearly that it could enhance transparency and mitigate compliance risk. So I'm not against expectation as instruments. Although, this is obvious, it's a new layer of regulation, and to be honest, it's to me very difficult to understand if it is really needed. The process described in the 15 points by Lucilla are quite self-explanatory, and to be honest, there is an entire part that is related with the governance of the products and the governance within the company. That makes sense, of course, even if I really have some doubt, general doubt about the fact that board members should be basically able to understand everything from the POG to the solvency and whatever. So I cast some doubt on this, but generally speaking, I do accept the rules as they are. Of course, the most difficult part is the appreciation, and in particular the quantitative appreciation of value for money. This is the most controversial and needless to say. First of all, because I want to be very clear on this. What is the value for money of a Rolex comparing with a Swatch? So we should avoid the offer of Rolex on the markets. What is the value for money of buying an orange in the supermarket rather than going to the farmer in 15 minutes drive and get 1/5, 1/10 of the price? So this is something that it's a very conceptual point, but still, you say the regulators should be modest, and the industry even more. But on this point, please do not think that everything is clear and obvious. I mean, people like to have Rolex if they have money, of course. And nobody asks to the Rolex to design target market, okay? If someone that is... having said that, the quantity parties and benchmarks, they are correlated to this discussion. We do not have benchmark in the expectations, but still we have some quantitative analysis. And to me, the very difficulty of the exercise are clear. There are different risk classes, different products with upfront and exit costs, different holding periods. I can go through a long list of characteristics of the products. So, to be honest, I do feel that any quantitative exercise risks to be, let's say, inadequate, not adequate to the issue. We'll see the discussion. We answer to the consultation. We'll see how the authority will proceed. Let me emphasize one thing regarding Lucilla's presentation that was very clear and very, I would say, I will share a large part of the presentation. And the point is on thresholds. Thresholds and cap are cousins. And you start with the threshold and then you end up with the cap. So this is something that, to be honest, if we do not want to go back from our beloved single market legislation, we should be very, very careful. And finally, one general point on the expectation. They apply to Italian companies. They do not apply, this is at least what I understand, to product offered by companies in freedom services or establishment. So, and this bring me to the point of competition Ante was doing before. I really agree 100% on what you said. We have to believe on competition. Because if we do not have competition in the market, then of course, price regulation is the only solution. But we have competition in the market. Unilinked products offered in Italy are there is a quite large share offered directly from outside. And the unit-linked products are not very different, to be honest. And from an insurance point of view, I'm not happy of that. Are not very different from mutual funds, some kind of mutual funds. So competition is everywhere. So if you impose rules just on insurance-linked product, you are basically saying that the other competitors will have a benefit. So why? Are we sure that this is what we really want in order to improve competition? So, concluding this point, and I think that I do see opportunities in this process of the expectations. I would prefer, to be honest, to go through this process, ending the story, not starting a new story in 12 months with the new regulation on retail investment strategy. But still, I do see some opportunities, but I do also see risks. And to be frank, we are here to discuss, and we are here to have a positive engagement with authorities, as also Ante asked before, and this is what we want to achieve. And finally, just one word. Customers are the most important source of revenues for insurance company. The fact that you always consider that insurance company and customer are enemies, this is something that I do not accept. 1/6 of the Italian financial wealth is in insurance company. In 2022 was the only asset class that didn't get any losses to insure, okay? The only asset class. Equities lost 15% and bonds 15%. So someone can really say that they were not value for money there?
Well, very interesting you conclude on the concept of value for money. Being a lawyer, I ask myself, how can we define value for money? Because once it's in European legislation, it won't take very long before somebody's going to raise the question, what is value for money? So I would like to use this opportunity of all this intelligence at the table to ask you, gentlemen, how would you define value for money? Would you like to start, Dario?
I'm an economist, and Pigot, in the 18 something, I don't remember exactly, was discussing exactly value for money, and what was discussing actually the value of money, which is not exactly the same thing. No. Not exactly the same things. And at the end they said, very simple, that it depends by preferences. And as an economist, I really believe that the value for money depends for preferences. Of course, if you are saying value for money instead of saying fraud or instead to say opportunistic behavior, it's a different things. But the concept, the very concept of value for money is a concept that has to do with the preferences. And to be honest, it's very difficult to have a regulation in terms of cutting threshold, starting from the concept of value for money.
Okay, very good. It's a question of preferences, which means that you make the concept of value for money a relative concept, not an absolute concept. But Paul.
I find myself in agreement with Dario. It is a question of the circumstances, the individual discussion, the person's needs, down to an individual, and the discussions, and what they want out of a particular set of circumstances and deal. I feel, though, at the extremes of any businesses, there are, I would see it, abuses that I think, okay, I don't know how to define them, but I know I don't like them. And I think we must strive to take practical steps to try to eliminate them without having unintended consequences. And I listened to Valerie talking about, she said it was not intended that the benchmark would be something. It's not what is intended I was worried about. It's what was unintended. I felt in those circumstances that could be the case. So I think we have heard today what I would call outliers. It's a phrase that is used all the time. I've heard it in the Polish incident, and I thought they were absolutely right to take the steps that they took in those circumstances. I think defining it in a very specific way is very difficult and very dangerous. I feel that we need the ongoing management of how products are produced. I think getting it into the product oversight and governance as an absolute necessity and working, I think is very, very important. Defining it, very, very difficult. It's about adding value. It's not about subtracting value, which some use it as. So it's a very difficult concept. You're the lawyer.
Okay, thank you. No, it reminds me of a discussion I once had with Americans about the interpretation of a rule, and I said, well, just use your common sense. Yes. Whereupon the American replied, how do you define common sense? And I said, well, just stop it here. So, Carlo, how would you, I don't even know how you translate that into Italian, value for money. Is this translatable? Value for money.
Rapporto qualità-prezzo.
How would you define it?
L'ho detto anche prima, io credo che bisogna evitare gli eccessi, quindi bisogna sempre tenere la compatibilità tra quello che è il bene che viene offerto e quello che è il rendimento che si può avere. Quindi se si sta in queste compatibilità evitando appunto distorsioni o che il business sia troppo prevalente rispetto anche alla valenza sociale, io credo che sia una delle cose che dobbiamo in qualche maniera tenere presente.
Okay. So that is it's the same sort of approach as Dario and Paul are taking. Ante, you have been working within EIOPA on this concept of value for money. Has EIOPA ever tried to define this?
But not specifically, but I would say that it is at the end something that is well worth to spend the money for it. So we are more dealing with the protection gap. So I can ask the different question why the protection gap is so large if the product has the value for the money which you are paying. And that is what we would like to reduce when we, for us as a regulator, is the biggest problem is a huge protection gap. And we put that into relation with the value of the product. So that is something what we would like to combine to have the best outcome for the consumer.
Yeah. if you mention the protection gap here, I think there's two concepts of value for money. There's the value for money of existing products, but the protection gap also relates to the fact that there is an absence of value for money for that sort of risks. The products for natural catastrophe are very often not even available. So that means that the products that are there are they're not existent. Anyway, ladies and gentlemen, I think we have explored the retail investment strategy. We started out by the general approach, and you saw this enthusiasm of all the people around the table, some enthusiastic about this great project, others very reluctant, careful, this is dangerous, where are we going to end up? In our second panel, we turned into insurance, and we looked at sustainability, all the requirements that we have, the difficulties of developing sustainable products. We talked about the protection gap, had some interesting messages from our colleague from Genoa about how you can look at protection gap in different ways. And then we ended up with discussing value for money after having listened to some supervisors and how they are managing the problems in today's environment based on the product oversight and governance principles. So you can see, ladies and gentlemen, this is a very complex area, but it's close to the heart of everybody, because what we're trying to do is actually what Dario was saying. An insurance company can only exist when there are people buying its products. So the consumer focus is absolutely essential. And I think that's maybe a message for all of us to take back home, to keep in mind also what Ante was saying. Don't sell a product that you wouldn't buy yourself. And that's a very nice way of saying putting value for money on what you put on the market. So, ladies and gentlemen, why don't you join me in thanking the panelists for the excellent contributions. Thank you. And I pass the floor to le grand chef.
Thank you, Karel. I'm aware that I am the only obstacle before the end of this long day, which I hope you all liked. So I can be very, very brief. Also because, to be honest with you, Karel summarized very well all the discussion. I just wanted to mention one simple aspect, and that is why we organized this conference on consumer-centric insurance. Actually, we are convinced that, notwithstanding all the criticism, regulation and supervision could be crucial to develop a consumer-centric insurance market. And for this reason, we try to also to say what is, in our view, a consumer-centric insurance market. That is a market where, not only companies remain solvent and fulfill the contractual obligation, but also a market where, consumers are fully aware of the risk they run. They have an easy access to the market, to the insurance market. They get a good advice. And at the end, they find the products that actually they meet their expectation at a fair price. And this is the ideal market. And as Karel said, it is not easy to reach. It is not easy because when dealing mainly with market conduct aspects, you always run the risk to interfere with the business model of the companies, with the objectives of of the managers of the companies, and sometimes it's very difficult if you want to regulate the behavior of the people. So it is very difficult, and I would say that supervision is not sufficient. We need also regulation. We can discuss whether the regulation, how the regulation should be shaped, but we need also regulation. We have 250,000 intermediaries in Italy. So, and we have to say which are the principles that those intermediaries should apply. And then with supervision, we can enforce those principles and we can address shortcomings. So it is important having a good balance between regulation and supervision. So it is very difficult to regulate also because, as you said at the beginning, the markets are different in Europe, so it is very difficult to create an harmonized regulatory framework for market conduct in Europe. And it is also difficult because it seems we are not there yet. You know, the market has still some shortcomings, and many of them have been highlighted today. And the cost of some products, the fact that certainly also we need more education for consumers. Some consumers do not think that the advice they receive is made in their best interest, and so on. Overall, this created a lack of trust in the market, which is detrimental, you know, if we want to really achieve a consumer-centric insurance. So for this reason, since we did something at the national level, and something has been mentioned also by our President Signorini, but we are aware this is not sufficient. We thought that we have to gather people from different perspectives, from different sides, in order not to necessarily to find a solution. This is, as you know, will be difficult, but at least to continue working together for, you know, at least taking a right direction in the issues. And I think today we had very, very interesting messages. You already summarized some of them. In the first session, we heard which were the rationale, the purpose of the intervention of the Commission to boost consumer trust. And the objective is shareable, I think, you know. And those intervention was welcomed by many parties, by the supervisors mainly, and with more skepticism from other parties, certainly. And I think, as often it happens, it will be a question of striking the right balance between the different issues. For example, on the ban of inducement, we have to find solution that limits the conflict of interest without restricting too much the access to the market. On disclosure, you know, we should find the complete information without too much cost and time-consuming information. Today we heard the concept of ergonomic disclosure, which is interesting. And also on the value for money issue, you know, we have to consider that we need somehow to measure the value of the products, but without focusing too much on the cost and without preventing innovation also. So striking the balance is not easy, but we have we have to do something to improve, I think, a market which is not yet, consumer-centric. And our activity as supervisors at least has this objective. In the second session, we heard how central is the objective of sustainable economy from the words of Mrs. Tinagli. And overall, I was struck by the fact that all the parties, both industry, supervisors, consumers, are actually not understanding very well what they have to do in order to the consumer to invest in something sustainable, supervisor to be sure that that this is not greenwashing, and the industry also they don't know how to design a product that is considered sustainable. So I tend to think that in terms of sustainability, regulation should give more clarity to the issues. And it was also interesting the discussion on NatCat about compulsory or non-compulsory insurance scheme and the consumer behavior. An analysis of why the consumers do not get a protection, do not buy a protection. In this session, or this afternoon, this was actually the session that we, as EVAs, expected more, because actually this was a kind of part of our consultation with regard to the approach we are having on the value for money. I have to say that if on the how value for money and how the benchmark are used in the RIS, in the Retail Investment Strategy Directive, there is disagreement, but overall I don't think that there is disagreement on the fact that the value for money is an issue that should be addressed by supervisors. And actually this is what we are trying to do. I think being also open and using a better regulation issue, because we are consulting on our expectations. I think I can understand the industry saying that we do not need more. We do not need more regulation. We don't need even the expectation. But to be honest, I would have expected that the industry itself says that this is an issue, because this is something that actually could damage also the image of the market as a whole. So I think that we together should more cooperative in addressing this issue of value for money. There are products in the market. There are few, not very many. There are products in the market which are not presentable to the consumer. This is an issue that should be addressed. Finally, a last concept with regard to the retail investment strategy. There are different views about ban and so on. But one aspect on which I think supervisors, industry representatives, intermediaries share is the fact that whatever regulation will be, it should recognize the insurance specificity. It should recognize if a product include the protection components. And this is something that on which we can be united in any discussion, negotiation of the issues. And actually, we as supervisor and regulator, we do not drive the market. We do not shape the products. We do not give indication of how the product should be designed. But to be honest, we think that a life insurance market with more protection, with more products that differentiate themselves compared to the normal investment products would be beneficial in the long run for everybody, both for the consumer and also for the industry. So I think this is one of the aspects on which we can work together, because insurance products should be an insurance products. And unfortunately now, if we look at the life insurance market, we know that there are so many life insurance products that has nothing to do with, or very little to do with the insurance. I would close here and just saying that, and I think Karel will remember, when speaking about Solvency II, we have spoken about Solvency II for many years, and you know very well. We were convinced, and I think this is what happened, is that the main advantage of Solvency II was not to have the SCR, was not to have the technical provision calculated in a certain way, but it was to have the risk culture within the companies and within the supervisory authorities also. So this risk culture was, I think, the main, positive result of a Solvency II. And I hope that by speaking about consumer-centric insurance, we will manage to develop and promote a culture of consumer-centric insurance. Everything you have said about, the approach that the company should have when selling a product actually goes in this direction. I think a culture is something that should affect all the aspects of the activity of the companies, the activity of the supervisors, and to a certain part also the approach of the consumers. So I hope that maybe next year, when we will repeat another event like this one, we will be able not only to record some progress, but also to recognize that a culture of consumer-centric insurance is developing. So I would stop here, and before that, I would like to thank all the panelists and speakers, especially those coming from abroad, and I would like to have a special thank to Karel that accepted kindly to moderate this event. I would like also to thank all the staff of IVAS that made this event possible. I really hope that what we said today will be useful, and everybody, as Karel said, will come back home and think about something new. So for this reason, I also thank all of you, especially you that remained here until the end, for your attention. And I look forward to welcoming you at the next at the next international conference of IVAS. Thank you very much. I forgot to remind you that you have the possibility to visit a very nice, interesting exhibition in the building where we had the lunch. It is an exhibition about the history of the currency, of il Museo della Moneta. I think it will give us, I think could be very, very interesting. So if you want, you can just go there. Thank you very much and have a nice trip back. Thank you.